Welcome to the latest Motley Fool scoreboard. I'm Anand Chakavalu. We've got longtime fools Jason Hall and Matt Frankel giving a 1 to 10 rating to Moneyball Rec PaySign, ticker symbol PAYS. First, we'll rate the strength of PaySign's business, including factors like industry and competition. 10 is invincible, a 1 is hopeless. Jason's at a 7. Matt, you're at an 8.
Yeah, this is a really interesting small cap. And the reason I gave it such a high score is it is a clear leader in a couple of really niche payment markets. Specifically, if you ever see those plasma donation centers, they're the clear market leader in the payment cards used to compensate donors. They have a rapidly growing market share in pharmaceutical affordability benefit cards. But these two things make up essentially all of its revenue, even though it has over 600 different card programs. So with over $700 billion expected to be loaded on prepaid cards next year alone, it's a massive opportunity if they can get some traction outside of their two niche markets.
So Matt's 8 and my 7 are really close, and I think we're pretty well aligned. I'll talk kind of some of the more of the risks here, some of the downside stuff. It is a huge market, but it's also extremely crowded, and it's hard to differentiate yourself. PaySign has done that in the niches that it's in, that it has a strong lock hold on. But what's less clear is, can it continue to expand beyond that? Because the market's betting on that. If you look at the valuation and its recent growth rates, the expectations that there's going to be growth within it, the industries that it serves, but also that it's going to be able to continue to expand share in other places.
I hope not. I hate prepaid cards. just Venmo me something. For management, a 10 is Warren Buffett, a 1 is Homer Simpson. Jason, you're at an 8. Matt, you're at a 9.
Yeah, so I was at a 9. Mark Newcomer is the CEO. He's also the founder. He started the business 20 years ago, still owns about 17% of the company, so he's well aligned with investors. Great record of return, and beyond him even. For such a small company, the executive team includes a former MasterCard executive, the former CEO of prepaid card leader Green Dot is on the board, so there's a lot to like about the leadership team.
Yeah, and I may be on the low end here. Revenue and earnings growth have been extraordinary, and shareholder returns too over the longer term, but really since 2019. And I wanted to get to before the pandemic, because there was like some other businesses out there that benefited during the pandemic from some non-recurring stuff. They got a lot of that too. So getting before that, revenue growth since really 2019 hasn't driven the same level of profit growth that we saw before that. So ding management a little bit here. But it's still, again, it's an 8, and this is an exceptionally strong group if you just based it on how well the business and the stock have done over the longer term.
All right, for financials, a 10 is a fortress, a 1 is yikes. Y'all are flipping from management. This time, Jason's got the 9. Matt, you've got the 8.
Yeah, and I mean, a solid argument could be made that I'm too low here. PaySign's got a strong balance sheet with no debt at all. Revenue grew 33% year over year in the latest quarter. And remember, this is a 20-year-old business. And net income roughly doubled. The pharma benefit card side is especially interesting and has a lot of growth potential ahead.
Yeah, and I think the thing that just compels me the most is if you look beyond just revenue growth, start looking at the bottom line. This is an incredibly cash-generative business, especially considering the small size and scale. And net income has recently returned back to growing again after coming off that peak period during the pandemic and a little bit of kind of sideways movement. It's growing again. And then you look at the balance sheet, you mentioned the lack of debt. Look at the cash. This business has like $120 million in cash and no debt. For a $300 million market cap that might be overvalued at this price, that is a ton of cash. And I'm really curious. I'm curious what management plans to do with that cash.
They plan to put it in the biggest prepaid card ever created. Good luck using that. Is it going to be the
balance that's big, or is it literally going to be like those checks, like the golf checks? You know, it's going to be a giant card.
Yes, but you got to go online to some secret site to find the balance every day. Good luck, CFO. All right, Jason, let's talk valuation. How well will PaySign stock do over the next 5 years? How safe is it? 10's a sure thing. 1's a lottery ticket.
So I think there's a little bit of binary risk here. This stock has been absolutely all over the place since the pandemic. Business was booming during the pandemic because of that opportunity. The stock was up a ton. It's come down. It's rocketed up again here over the past year or so, given up some of those gains. So I think it could be a little bit bubbly again. But the counter to that's revenue growth is in the low 30% range in recent quarters, showing some signs that they're starting to get some traction and drive a little bit of growth. Can it take more share? Is the opportunity for growth in the pharma industry and that core business that it funds, that it operates in? Can it continue to be a huge winner and grow? It's a really strong business and it's really profitable, but it's super tiny and it's priced for continued growth. And the risk there is if growth slows down, people are going to forget it exists and the valuation is going to fall a ton and investors could lose money. So they've really got to continue to grow to keep investor interest at this tiny size.
Yeah, I said 15% plus over the next 5 years, but investors should buckle up for a roller coaster ride. My safety score of 5 is probably on the high end of what it should be. It's a very small company. It would likely need to get some serious traction in one of its other 600 different payment products to really kind of justify where it's valued today and to generate serious returns. Tremendous execution lately. If it can keep its momentum going, and that's a big if over the next 5 years at this rate, it could be a 15% returner.
Thank you to both Matt and to Jason. They've given PaySign a strong overall score of 7.6 out of 10. Look out for a new scoreboard every market day at 7 p.m. Eastern. Next up is something good, I promise. Till then, full on. Wait till, luckily the camera can't get me just crawling around on the floor, which is what I'm going to do right now.